Welcome to FlashCore, your sharpest source for daily headlines and deep dives. If you're new here, don't forget to hit that subscribe button and stay ahead of the curve. Welcome back to FlashCore. Today, we're exploring a subtle but significant shift in global trade. Canada quietly overtaking the US as a preferred partner for many key countries. From Mexico to China, the UK to Japan, nations are deepening ties with Ottawa, signaling a realignment that could reshape economic power for decades. Let's break down what's happening, why, and what it means for the US and the world. Let's start at our border, Mexico. The USMCA was meant to cement US-Mexico-Canada trade, but Canada is now making major inroads, especially in automotive and aerospace. Canadian firms are embedding themselves in Mexico's supply chains, offering advanced components and stability that Mexican businesses increasingly prefer. Canada's consistent trade policy is seen as less volatile than the US, making it a pragmatic choice for Mexican companies looking to de-risk. This shift means the US faces real competition from Canada within North America, challenging the assumption that proximity guarantees dominance. The flow of goods is now a complex triangle, with Canada playing an assertive role. Mexico is actively diversifying away from US dependence, and Canada is the main beneficiary. For American companies, this is a quiet but significant erosion of market share in critical sectors. It's not a hostile takeover, but a strategic repositioning that could redefine North American economic power. The US must now adapt to a new reality where Canada is a true competitor, not just a partner. The North American trade landscape is changing, and fast. Turning to China, the US-China trade relationship has been turbulent, marked by tariffs and disputes. Canada has stepped in as a stable, reliable alternative, especially in agriculture, filling the gap when US farmers lost access during trade wars. What began as a temporary fix has become a long-term partnership, with China now relying on Canadian soybeans, pork, and more. Canada's straightforward, commercially focused approach is attractive to Beijing, free from the political baggage of US trade. Beyond agriculture, Canada is supplying China with lumber, minerals, and even attracting Chinese students and tourists. These ties bring billions to Canada and build soft power, as future Chinese leaders form connections in Toronto and Vancouver. For the US, this weakens its leverage. China can now source critical goods from another G7 nation. Canada acts as a relief valve, letting China weather US trade pressure more easily. This shift fundamentally alters the US-China dynamic, reducing America's economic influence. The US must now contend with a new, multipolar trade reality. After Brexit, the UK sought new trade partners. While US-UK negotiations stalled, Canada quickly secured the UK-Canada Trade Continuity Agreement. This deal gave Canadian goods preferential access to the UK, while American exporters faced new uncertainties. Canadian firms in finance, tech, and agriculture gained a clear advantage, operating with the certainty of a formal trade deal. In sectors like automotive and agriculture, Canadian companies maintained frictionless supply chains and tariff-free access. Canada's speed and pragmatism paid off, capturing UK market share the US once took for granted. The special relationship is now more complicated, with Canada filling gaps left by US hesitation. It's a lesson in how diplomatic agility can translate into economic victory. Germany, Europe's industrial powerhouse, is rethinking its energy and tech partnerships after the Ukraine war. Canada has emerged as a key supplier, signing a hydrogen accord to provide green hydrogen and LNG, directly replacing Russian gas and bypassing US suppliers. Canadian tech firms are also gaining ground, offering innovative solutions without the data privacy concerns tied to US giants. Both governments are actively deepening ties, collaborating on critical minerals, batteries, and advanced manufacturing. This partnership builds resilient supply chains independent of China and the US. For the US, it's a missed opportunity. Canada is now Germany's go-to for energy and tech. Germany's pivot shows even close US allies are diversifying for stability. The US must adapt or risk losing ground in key global markets. Japan, the world's third-largest economy, lost US preferential access when America left the TPP. Canada stayed in, gaining a huge edge through the CPTPP. Canadian beef, pork, and wheat now enter Japan with lower tariffs than US products. Canadian resources and energy are in high demand, and new partnerships in LNG and hydrogen are forming. Japanese companies are investing in Canada, seeing it as a stable gateway to North America. The CPTPP has deepened investment and trade, creating jobs and solidifying ties. Canada's commitment to Pacific Free Trade has paid off, capturing market share from the US. This is a clear example of the cost of US retrenchment. Canada's agility has made it Japan's preferred partner in key sectors. The US risks falling behind in the Asia-Pacific. South Korea, a tech and manufacturing giant, once relied on the US for trade. But Canada's free trade agreement has changed the game. The Canada-Korea FTA eliminated tariffs, giving Canadian exporters a real edge. Canadian beef, pork, and seafood now dominate Korean shelves, outpacing US competitors. Canada is also supplying energy and critical minerals for Korea's EV and battery industries. Shared democratic values and trust have deepened collaboration in tech and R&D. South Korea is clearly diversifying and Canada is a top partner. The US remains important, but Canada's role is growing fast. The trade landscape in Asia is shifting. India's massive market is a top prize, but US-India trade talks have stalled for years. Canada is taking a phased, pragmatic approach, negotiating an early progress trade agreement to lock in early wins. Canada's agricultural exports like lentils and potash are vital for India, while Indian IT and pharma see Canada as a stable gateway to North America. The large Indo-Canadian diaspora builds trust and business ties, a unique advantage over the US. Canadian pension funds are investing in India's infrastructure boom. If Canada finalizes its deal first, it will gain preferential access and a strong foothold. American firms could be left playing catch-up. Canada is running a smarter, more agile race in India. Brazil, Latin America's largest economy, has long been a US sphere of influence, but Canada is quietly expanding its presence. In aerospace, Canadian firms are deeply integrated with Brazil's Embraer, and in mining, Canadian companies are major investors, valued for their sustainable practices. Canadian pension funds are investing in Brazilian infrastructure and tech, while Toronto and Sao Paulo tech hubs are increasingly connected. Canada's commercially focused approach builds trust, unlike the US's often politicized strategy. This steady expansion is eroding US dominance in the region. Canada's model is proving more effective in navigating Brazil's complex business environment. The US must rethink its approach to stay relevant in South America. US-France trade is often tense, but Canada's CETA deal with the EU, championed by France, has given Canadian exporters a major edge. Tariffs are gone for Canadian goods while US firms still face barriers. Aerospace, agri-food, and tech sectors are thriving, with Quebec's French connection building trust and making Montreal a natural entry point for French firms. Cultural and linguistic ties give Canada a unique soft power advantage. France increasingly looks to Ottawa, not Washington, for North American partnerships. This deepening relationship shifts the transatlantic balance. Canada is now France's go-to North American partner on key issues. The US-Saudi relationship is strained, and Saudi Arabia is diversifying under Vision 2030. Canadian firms are winning contracts in infrastructure, education, and healthcare, seen as neutral and technically proficient. Canada's universities and visa policies attract Saudi students, while Canadian healthcare companies modernize Saudi hospitals. In energy, Canada is partnering on renewables and hydrogen, building long-term ties. The US is losing its monopoly. Saudi Arabia wants multiple partners. Canada's reliability and expertise are carving out a valuable niche. The kingdom's economic future is less US-centric than ever. Australia and the US are close allies, but Australia is strengthening ties with Canada, another resource-rich democracy. Both are CPTPP members, eliminating tariffs and boosting trade in services, mining, and tech. Cross-investment in mining and collaboration on critical minerals are building supply chains independent of China. Canada and Australia are also aligning on clean tech and climate policy, finding joint solutions for their economies. For Australian businesses, Canada is often an easier entry to North America than the US. The Canada-Australia partnership is now more advanced and integrated than ever. Even among America's closest friends, economic ties are shifting. The global landscape is becoming less US-centric. After examining these 11 countries, it's clear US economic dominance is quietly eroding at the edges. Canada's smart diplomacy and stable trade deals have made it a premier alternative for nations seeking reliability. The world is moving toward a multipolar trade network, challenging US exceptionalism. Canada's rise is the clearest sign of this realignment. Is this a temporary phase, or the dawn of a new global order? Let us know your thoughts in the comments, and subscribe for more deep dives. Thanks for watching.